Investing just $100 can change your financial future. Open a brokerage account with no minimum deposit. Consider fractional shares and ETFs for diversification and reduced risk. Use robo-advisors for personalized portfolios. Define your savings goals, whether for retirement or a big purchase, to guide your strategy. Remember, investing takes time. Stay patient and keep learning. The market will have ups and downs, but with discipline, your $100 can grow. Reinvest your earnings to benefit from compounding. Start now and see how. Seeking financial stability? Here are some concise tips. 1. Track expenses. Know where your money goes to make better decisions. 2. Budget. Plan your spending and saving. It's not about restriction, but prioritization. 3. Save. Aim for 20% of your income. If not possible, start small and increase gradually. 4. Pay off debt. High-interest debt drains finances. Make a plan to settle it quickly. 5. Invest. Build wealth over time with retirement accounts, stocks, or real estate. Remember, these tips are not one-size-fits-all. Find a strategy that works for you and stick to it. Shape your own financial future.
How do you protect your financial future? Start with the basics, your emergency fund. Here's why it's a game changer. Are you ready to create a financial buffer that keeps you safe and sound? Emergency funds are not just a nice-to-have. They're your financial safety net for those just-in-case moments. First off, how much should you actually save? A good rule of thumb is 3 to 6 months' worth of living expenses. This covers everything from unexpected medical bills to sudden job loss, ensuring you don't spiral into debt. Why is this critical, you ask? Well, life loves to throw curveballs. Without an emergency fund, a simple car repair can unsettle your entire budget. Think of it as your personal financial shock absorber. Start small if you need to. Even $500 can pull you out of many tight spots. The key is to start now, grow consistently, and watch your fund become a cornerstone of your financial plan. Remember, financial planners, it's not about if emergencies will happen, but when. Be prepared, stay informed, and keep building that fund. Your future self will thank you.
If you don't clearly understand your competitors, you risk losing your investment and being outpaced by them. If you analyze your competitor clearly, it'll help in understanding the market landscape, creating a competitor advantage, and optimize your inline presence. Analyzing your competitors will aid in comprehending the market landscape. Creating a buy, actively monitoring and analyzing your competitors, you can gain valuable insights to make informed decisions, develop a strong competitive advantage, and ultimately grow your business. Investing can be overwhelming, but it doesn't have to be. Here are 3 easy strategies to start building wealth. Number 1, low-cost index funds. These track major indexes like the S&P 500 for broad market exposure, a simple, hands-off investment approach. Number 2, dollar cost averaging. Invest a fixed amount regularly, regardless of share prices. This can smooth out market volatility and reduce short-term impact. Number 3, retirement accounts. Contribute to 401ks or IRAs for tax benefits and long-term wealth growth. Please like this video and follow for more finance tips daily.
Investing in a high-growth startup is like planting a seed for future success. When banks provide equity, they're not just funding, they're fueling innovation and expansion. Picture an investment banker diving deep into financials, analyzing trends and projections. This meticulous process is what drives equity deals, ensuring both the startup and investors thrive. Remember, equity investments are vital. They stimulate market growth, create jobs, and push boundaries. By supporting these ventures, we're not just investing in companies, we're investing in the future of our economy.
Why do the rich stay rich, while others struggle? It's not luck, it's habits. The wealthy study finances like a full-time job. 10-year plans are greater than 10-minute pleasures. One job is risky. They stack multiple streams of income. They enter rooms where they aren't the smartest. They skip instant rewards for future freedom. Car values drop, real estate grows. Want more money? Solve more problems? They run on routines, not moods. Start building these habits today. Like and follow for more.
Myth number 1, investing isn't just for the wealthy. Anyone can start small. Myth number 2, while the stock market carries risks, you can manage them by understanding your risk tolerance. Myth number 3, perfectly timing the market is a myth. Steady investing often yields better results. Follow for more finance tips and education daily.
You're not broke because of your job. You're broke because you copy other people's lifestyle. Every raise turns into a new car, new clothes, new weekends out. Income goes up. and your expenses sprint right behind it. You're paying to look rich on a screen while your savings account stays stuck on zero. Stop buying proof for strangers. Build something only your future self will see.
Wondering if your next investment property is a gold mine or a money pit? Then you need to understand cash flow analysis. Cash flow analysis is all about knowing how much money is coming in versus what's going out each month. Start by looking at rental income, mortgage payments, taxes, insurance, and unexpected costs. Once you calculate all those numbers, you'll see whether your investment is profitable or if you need to rethink that offer. So dive into cash flow analysis today to make informed real estate decisions. Start maximizing your profits now.